Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures and Crypto Market Outlook, where we take a look at our favorite futures markets and crypto markets and formulate an attack plan for tomorrow's trading. Tomorrow is going to be the 28th of the month. Welcome back from a long holiday weekend. I hope you all enjoyed your time with the family and the Thanksgiving holidays and all of that. Definitely plenty to be thankful for around here, and well, coming back is a little bit slow as expected. Very frequently when you go on a big break like that, the markets tend to be a little bit slow as everyone's kind of coming back to the office, getting their bearings straight. So give that a little bit of time, and that's something to consider as well. I know if you're anything like me, I love trading. I don't like weekends because I can't be trading, right? So when you have that kind of dare I say, addiction, when you come back from a long holiday, it's really easy to get wrapped up into all of the moves. You want to jump all over the place because you're really excited to be back. And that can be a big detriment if you're not careful. So one thing that I always make sure to tell myself and all of our members in the room, when we first come back from a long holiday, we're going to take it easy today. We're going to back off the gas pedal, make sure that everything is in order, make sure that we've got everything working and running correctly, get all the charts marked up and all that fun stuff. But we're not going to have our aggressive shoes on today, just because it can be really tough when you start throwing yourself into all these different trades, and then you don't want to come back from a long holiday to a losing day. That's not the kind of situation that you want to run into. So something to kind of think about when you're coming back from a long holiday. Give yourself a little bit of a break, take a pause for a second, just watch the charts, let them go through, and get back into the groove of things so you're ready to go for tomorrow's trading instead. Might save you a little bit of money in the long run, but either way, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From here, you'll be able to sign up for our email list so you'll be notified every time one of these videos comes out. Along with that, in the email itself, we go over all of the things of interest. It could be stocks, cryptos, futures, you name it, it's going to show up in there at some point. So definitely something that you want to sign up for so that you don't miss any of those interesting little tidbits that could be added to your game plan in the coming days. Along with that, make sure to click on the live trade room subscription and trial info so you can sign up for a free 3-day trial in our live trade room. You can hang out with us for a couple days and see what we're all about. You can sit in the room, you can see our screen, see the trades that we're looking at, potentially taking, different opportunities, all kinds of fun stuff in the trial, and that gives you a couple days so you can hang out with us. You can ask questions and all of that. Really good way to kind of get an inside look in terms of how everything looks, runs, operates, and all of that. So make sure to sign up for that if you haven't done so already. Now, starting off, we have the euro, which has been ripping to the highs. Beautiful rally to the upside, almost to 1.2, not too far away now, and that could be a big magnet for the euro to try to grind back up again. The last time we were above 1.2 was all the way back here in kind of mid to late September, and now we're kind of rounding ourselves right back off again. The overall movement that we're seeing here on the euro is very strong bull from the bottom. We have a strong bull channel working its way higher, and the highs maybe not matching perfectly to a channel, but we are starting to see some signs of maybe a little bit of a wedge top, a slightly shallower angle to it. Now, that doesn't necessarily mean that it's a bad thing, but we are seeing the buyers lay off the gas pedal a little bit once we hit the highs, and now we're starting to see a pretty deep pullback. So really what I'm looking for is the market to want to come back to an area of interest. The next big area of interest is something that was kind of left behind. We broke out above this major swing high and they never looked back, just a huge run up. And very frequently when markets break out like that, they love coming back and retesting those zones. You can think of it as sort of a gap. And when that gap is open, well, we tend to understand that gaps fill at some point, and if we can get a pullback to retest around that area, that would be a beautiful potential buy zone to push the market back up. Now, it is definitely difficult to ignore the amount of bearishness in this most recent drive down. Of course, it doesn't overshadow the bullishness, but one thing that I would consider looking for would be a strong bear leg down, maybe a pause or maybe even a little bit of a correction, and then a secondary leg down to finish the job into that major area of support. I don't really want to see this go all one move down into that major support because it might not be done then. Generally, if you can get two legs of a pullback, you should be pretty good. They might have maybe one or two smaller ones left in there, but that's really about it in terms of pullback. So I would like to see this form in a two-legged correction back to around 815 for buying pressure back up to attempt those highs once again. Over on gold, we have gold still relatively range-bound, not a whole lot going on, and it's actually kind of taking notes from itself. Looking at these previous swing highs, every time we poked above a swing high, it has failed massively every time, right? And sometimes it breaks out a little bit above it, but then it fails down just as aggressively. And now we're right back at a swing high again, and guess what? We're probably going to fail back down. So in the short term, looking for possible selling opportunities doesn't necessarily hurt my feelings. It is going against the trend. So what I would rather do is say, okay, well, we know that every time we break one of these swing highs, it has a deep correction, right? If we look at the overall low to high, once it broke that swing high, this pulled back a good 60 to 70%. The same thing happened here. We broke above that high, it pulled down about 60 or 70%. We broke the major swing high, it pulled back about 60 or 70%. We're looking for the same thing here. So really what that tells us to do is look for a deeper correction, and we can use our fib tool to find that location. We draw the fib retracements. We're looking at this major swing here since we broke above that swing high, and we're looking for a deeper correction down to probably around 1279.5 to 1280 if it wants to stick within that, 70, 60, 70% range. If you really wanted to bracket a range off, it would be between here, the 61.8 and the 786. That's kind of the hot spot zone that we're looking for on a dive lower. From that point, we continue on with a bullish trend, looking for buying opportunities out of here to shove the market back up to the highs. But right now, since we're failing off the top, they even, if we come and zoom in a little bit, they even came back and retested it as a level of resistance. That's not really something that I want to play around with. We have a big ceiling being put in on the gold market right now, and every time it's happened before, we've had a good 60 to 70% drop, sometimes a little bit further. I'm looking for the exact same thing here as well. So if we cut this in the middle, we're looking for a dip to around 81.5, where we can then buy in and shove the market right back up to new highs. Over on crude oil with a nice bullish continuation to the upside, breaking back above pretty much everything that happened before. We had that big dip lower where they shed a decent amount of price. If we look at the overall drop in price, we dropped about 5.3% on that dive lower before catching a rally right back up again. And now we are seeing some very strong bullish sentiment coming back into the crude oil market. It does appear as though we have gotten a little overextended to the bottom, and what I would really like to see is for the market to come back to this zone down here and retest it one more time. The reason I want to see one more time is because we're going to have a lot of early buyers that try to buy that initial bounce, that little inside bar that happened on the hourly here. And one of the best setups that you can get your hands on is when you get that type of overexertion. You can see it's a parabolic curve where it picked up speed really fast and then caught an equal pause and bounced right back up again. If we can get one more tap, that's going to trap out all of those early buyers, hit those stop losses, and potentially even trap a previous low. And this is where all of the whales are going to be jumping in, right? This is where the big boys are looking for trading to drive the market right back up again. All of the big orders, the big stacked cash, they're going to be waiting for around 57.60 to 40 so they can buy in on that trap to push the market back up to the highs. So even though we are a little bit overextended and we may not even come back down to the bottom, I would love to see one more attempt at those lows for that trap so we can turn this back around and retest the top a little bit later. And then finally, the S&P, beautiful rally to the upside on the 21st going into the holidays with that just gorgeous rally up. Nice two legs to the highs, and then we paused for a little while. You could even consider this somewhat of a kind of a flag correction back down, and now we're breaking out through the highs. The one thing that does stand out, of course, this does really feel like an ascending wedge, and we're running out of time. And very frequently with an ascending wedge, the market, if it does break out against the trend, this is a bullish wedge, right? It's ascending. So if it breaks down, that usually means that we're looking for an area of major previous market structure, right? Previous swing highs, swing lows, cluster areas of support and resistance, stuff like that the market is going to be hunting for a bounce. And one thing that stands out really obviously, big swing high and a swing low meeting up at the exact same price point at around 25.90 to 25.89. That zone is going to be huge for the S&P if we can start getting a breakdown. Right now, there's not really much we can do because we're just sort of stuck in the wedge and there's not really a whole lot of room to move. But if we can catch a break down to around that 25.90 area, that is going to be a huge hotspot for the market participants to buy in and shove the market right back up towards those highs and continue this bullish trend that's been going on for quite a while. Certainly not... it did get a little bit sideways, I guess, but this is a very strong bull trend, and a lot of buyers are just going to be waiting for an excuse to buy And that excuse would be a very nice area of potential structure inside of here, around 25.90 down to 25.85 or so. That whole zone is going to be a big buy zone to shove the market right back up again. So that's going to do it for the outlook. Now, in terms of the news, we didn't have a whole lot today. We only had one news announcement today. That was the new home sales. And looking at tomorrow's calendar, we are picking up a little bit. We've got some more news, but not really huge. Tomorrow morning out of the UK at 2:30 Eastern time, that is, out of the Bank of England, Governor Carney is speaking. At 9:45 for the US session, FOMC member Powell is speaking. At 10 o'clock, we have the CB Consumer Confidence for November. The forecast is 124. Previous was 125.9. And then out of Canada at 11:15 tomorrow, we have the Bank of Canada Governor Paulos is speaking. Not really any huge numbers or huge speakers, but we are starting to see the news come back in force, and we know that tomorrow people are going to be a little bit more rested and a little bit more prepared for the trading day ahead of them. So it is something to definitely keep in mind that we may have, a little bit more action around the news, even though it's not the biggest news announcements in the world, just because everybody's kind of jumping and anxious and ready to get going for the trading week ahead. Now, jumping over to the cryptocurrencies, Bitcoin. Hard to not talk about Bitcoin when it's pushing up to near 10,000 now. Monstrous rally to the upside. Everything is looking phenomenal for Bitcoin. And right now, after that really nice pullback to around the 5,000s, we haven't looked back. And keep in mind, you know, it sounds crazy. Oh yeah, the pullback to 5,000, we're sitting near 10,000. It sounds insane. But that was actually only a few weeks ago. It wasn't that long ago that we were sitting at around 5,000, and now we're all the way up to almost 10. Bitcoin just keeps rocketing to the upside, and now with the on December 11th, we have the Bitcoin futures coming out. That's driving even more money into Bitcoin in the sense that there is more popularity to it. It's gaining more and more mainstream attention, and the more attention that it gets, the more money is that it's going to flow into Bitcoin, and the higher it's going to go, and it's just going to keep going up. And I think buyers are really kind of picking up on that. Every time there's a dip of 10% or more, it's bought up really aggressively, and now, I mean, there's barely any dip, and the buyers are slamming into it. We can see that with these big wicks on the bottom. These pullbacks are not really much at all. If we look from that high to that low there, we're talking a 4.5% pullback, barely anything when it comes to Bitcoin, and it was snapped right back up again. So really any pullback that Bitcoin sees right now, we're looking at some huge buying pressure that's stepping up. And it's not really a big surprise when you see in 3 or 4 weeks the price is doubling. A lot of traders are going to be eyeballing that 10,000 level, and it's not too far away. So really what I'm looking for is for the market to want to come back and retest some shallower edges of support. We have a big breakaway move right here. Even retesting the lows of that breakaway move could be a nice little bouncing area to shove the market up. If we look for some previous areas of structure, of course, we do have the swing high, swing low retest area. That will be the next zone of interest below that. And depending on how long it takes, if we can kind of rattle around a little while, we might have a test, something like this, where we can get those levels to coincide with one another, around 9,200 and 9,400 for some areas of interest to push the market back up. Either way, buyers are aggressively snapping this market up, and we're barely sitting on a 5% pullback right now. If we get any more than that, likely buyers will just be waiting for it. And usually, I don't put this fib on very much, but the 382, because of the amount of aggression, a 38, a 382, that basically means we're going to be pushing back to around 9,000. That could find a huge amount of buyers to pop the market right back up as well. So pretty much any pullback, if you're not getting that out of what I'm talking about here, any pullback right now, we're sitting on about a 5% pullback. Buyers are snapping into this, looking for a new high once again. If we can get a slightly deeper pullback, a 5, 10, 15% pullback to around 9,000, that's going to be really juicy for that rally up to finish off 10,000. Looking at Bitcoin Cash, we're just stuck in a range. Range high at around 1737, range low at 1539. Now, noting that we do have a bull trend really from the 17th or so on up, any dip below this area is going to be considered a nice area of interest for buying pressure. And that's going to be anywhere from sub 1400s up to around 1450 in that buy zone to pop the market back up again. Whenever we're trading in a range, we always have to tell ourselves and remind ourselves over and over, buy low and sell high. And that's the situation that we're sitting in on Bitcoin Cash right now. So right now we're in a range. I'm looking to buy low, and anywhere around 1450 or lower is going to be cheap, at least in the way that I'm looking at it, and looking for that pop back up so we can sell it high. On Bitcoin Gold, stuck in a little bit of a wedge, finding a good level of support coming in at 336, descending wedge top coming into play for a flat bottom wedge. There was a huge sell wall that was sitting here on the bid-ask side of things, but the ask side wall is now gone. I actually posted a picture of that on Twitter earlier today if you want to reference. You can see that right on there. Make sure to sign up for our Twitter page as well. But that big sell wall is now gone that we were talking about earlier, and with that out of the picture, that does kind of clear the way for another rally up. One big target area that I'm looking for, aside from the fact that this little swing high could be a possible trapping area, it is ahead of 400. 393.16 is the kind of smaller term target. I would say the medium term target objective to the upside is going to be 409, just ahead of those highs. Buyers are still building in, and anything below this low of support is going to be considered cheap, and we can see the amount of aggression coming in on the buy side whenever it dips down there. That's something that I need to be paying attention to. So if we can get a dip down below 336 or so, that is sale pricing, and we can start looking for a rally back up once again. Ethereum, we're just kind of going sideways a little bit. They tried to poke their heads above the highs, didn't do so well, and started to fade back. A little bit of a twin reversal on the highs even, showing some concern for the bullish move, not necessarily as a whole, but just in the short term, that buyers are taking profits on new highs. And that tells us that we need to lay off the gas pedal a little bit and look for some cheaper pricing. And that cheaper pricing is going to be around 450 down to around 448, 447 or so for that buying pressure to pop in and shove the market back up from there. Now, we may not pull back that far, but if we do, I have to assume that buyers are going to be pretty aggressive. So because of that, short-term buyers might just jump in right now. It's pulling back, right? I would prefer to see some slightly better pricing down at around 450, and that's kind of what I'm waiting for personally here for another bounce back up towards the top. Litecoin pushes all the way into a high. If we look at this candle right here, that was a high of 93.89, and the next candle after that was 93.74. So just a monster rally to the upside on Litecoin. And this goes to show you the importance of seeing an organic breakout, right? An organic breakout versus a manufactured breakout, something that happened on news or an event, which was here and here. An organic breakout has a lot of follow-through. If you couldn't tell by this gargantuan rally up, when we were talking about these breakouts back here, there was a big concern of that line in the sand being stuck at around 60, and every time it broke above it was on news or an event or something along those lines, and we finally started getting away from it without news trying to push it above. That's when the rocket boosters really kicked in, and now we're pushing into near 100. And again, I still believe that Litecoin should be around $150 market early next year. We're not too far away from that. I might have to change my projection at this point, but around 150, I'm looking forward around January, February for tomorrow. So that means that we are still pretty cheap on the Litecoin as long as nothing happens in between that period of time. Looking to buy cheap though, we are seeing a little bit of exhaustion from the buy side. They're putting too much effort on these highs without much of a pullback. We have some key pullback areas, 84.26 and 79.84, that I would love to see a dip down to so we can buy. We are testing the lows of the channel, and buyers have already began to buy into it. I would just like to see a little bit more from it to get some better pricing. So 84.26 is what I'm waiting for. If it wants to go a little bit further, then 79.84 would be after that. But again, long term, I think Litecoin has a lot of potential ahead of it. We're about half of what I believe it should be going into the next couple months here. And I think a lot of traders are starting to kind of see that same picture, and that's where this big breakout move to the upside is, going up nearly 60-70% over the last week or so. Definitely nothing to shake a stick at. So beautiful movement to the upside, just waiting for a slightly better price. Over on ADA, good old ADA, Cardano, one of my favorites that I've been building into a long time. We were talking about some buying pressure and just slowly dollar cost averaging into ADA, and if you were holding on to it and you stayed patient, you got paid. That was a 70% rally to the upside, pushing all the way up to nearly 600. 596 is where it topped out. And that is certainly nothing to be upset about. That is a monster rally, and that's the pop that we've been waiting for. Now, long term, I still think ADA has a chance to rival Ripple. I'm not a big fan of Ripple if you've talked to me before, but I think it has a chance to rival that same price point at around 15 to 20 cents. Ripple's a little bit higher than that, but I do think ADA has a strong chance over the next coming year or so, going into late next year. I would be surprised to not see ADA sitting around 10 to 15 cents. I think it's definitely possible as long as they stay with what they've been doing so far. Everything they've been doing so far has been pretty strong. There's a couple hiccups along the way, as with any new currency or new business, but for the most part, ADA does still look strong, and I'm looking for more continuation, but you definitely had a nice payday on that 70% rip higher. Over on ETP, not JETP, ETP, we have Metaverse just kind of floating in the middle, not really doing a whole lot. We're stuck on a big sell wall right now, which is at $3.67. If we can start getting that out of the way, then we should be all systems go to the next big sell wall, which is sitting at $3.70. You're getting kind of a common denominator here, where there's a lot of sell walls on the way up, and that could be a lot of those shorts that we've been talking about, those margin shorts who have been selling for a long time trying to drive the market down. They're going to have to start liquidating at some point as long as this continues to drive up. Either way, that big $2.90 mark that we were watching for a very long time has paid off very nicely. Even if you bought the high side of that, that was a good 40% rally to the upside. Now we're sitting kind of in the middle. So with the range, we're looking to buy low, sell high, stay out of the middle. Right now, we are smack in the middle. So what do? We sit on hands and we do nothing, and we wait for a dip below $3.50 so we can start to buy a little bit more. So that's going to do it. I'm going to leave NEO off of the list for now until we start getting some better movement out of it. NEO, for the most part, isn't really doing a whole lot. Even if we look at the US dollar pair, we're just kind of stuck. I think what we're really waiting for with NEO is a bigger dip lower. We're not seeing good conviction to the upside above $40. When they did get above 40, it corrected back pretty aggressively. And even though that was resting in a buy zone at around 33, I think a lot of buyers would love to see a snap back to around 36 so they can really start hammering in. Notice also another market with a lot of big sell walls. So we'll leave NEO off the table for a little while, waiting for a slight dip so we can buy at a better price. So that's going to do it for the outlook for futures and crypto. Hopefully you learned something, hopefully you found it useful and interesting, something you can add to your tool belt for tomorrow's trading. Aside from that, if you have any questions, feel free to email jbrink@slingshotfutures.com. And like we always say, it doesn't matter what market you're trading or approaching, always, always, always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.